Preliminary data suggests that business activity and consumer sentiment in the United States are declining. As the economy weakens, expectations of further interest rate cuts by the Federal Reserve have increased. This is the result of Donald Trump's first months in office. While he has been mostly promoting potential tariffs and threatening the world with them, the US dollar has fallen by more than 3% from its January peak. The upcoming macroeconomic data could reinforce this trend. You are watching Traders Calendar on February 26. US crude oil inventories have been rising for the past few weeks. As of February 14, stocks increased by 3.34 million barrels, following a 9 million barrel surge the week before. It was the sharpest jump in recent months. The series of increases has completely offset the previous period of declines. As a result, the oil market remains tense, as oversupply could put pressure on prices. However, if production starts to decline, volatility will only intensify. Amid oil market fluctuations, inflation in Australia continues to rise steadily. In December, prices increased by 2.5%, accelerating from a 2.3% in November. Forecasts suggest that this figure could reach 2.6% in January. If these expectations are confirmed, the Australian dollar will get a boost, as accelerating inflation reduces the likelihood of an imminent monetary policy easing by the country's central bank. In Europe, the situation looks quite different. Consumer sentiment in Germany continues to worsen. In February, the index dropped to minus 22.4 points, which is worse than the previous reading. Analysts foresee a deeper drop to minus 21.6 points in March. A sluggish economic recovery, rising layoffs, and business closures leave little room for optimism. If actual figures meet or fall short of a forecast, the euro may weaken. However, France is showing cautious optimism. The leading consumer confidence index for February is expected to remain at 92 points, matching January's 3-month high. Although still below the long-term average, the gradual increase suggests a recovery in household confidence. At the same time, some analysts predict a decline to 91 points. If the actual data comes in lower, the euro may once again face pressure. The US economy has recently begun to show signs of a weakness. The housing market situation is one of the long-term economic indicators, as it involves not only builders but also suppliers of materials, raw materials, fuel, equipment, and services. Given that new home sales in the United States increased in November and December, the January forecast of a decline reflects negative trends in all these sectors. If the anticipated figures fall below 690,000, it will another signal of a possible slowdown in the US economy. In this case, the US dollar may also weaken. An unofficial report on crude oil reserves from the US Department of Energy may also affect the global oil price balance. Over the previous week, ending February 14, US crude oil inventories rose by 4.63 million barrels, exceeding a forecast of about 3 million barrels. The outlook for the new week is also lower, with the projections suggesting stocks may increase by just 1.5 million barrels during the period ended on February 21. Any figures below the previous level may push oil prices higher on expectations of a potential supply shortage. The industrial sector in Russia's economy is also expected to slow down. After 8.2% growth at the end of 2024, the January 2025 figure may drop by nearly half to 4.7%. If the data meets forecast, the ruble may come under pressure. Additionally, key speeches from the officials of leading central banks in the United States, United Kingdom, and the Eurozone are expected this day. Comments from financial policymakers often trigger volatility in the currency market, as they may hint at future interest rate decisions. Please note that the time of publications is set in a GMT plus 3. The next video review of Traders Calendar will be released on February 26. So, see you!